I think I'm getting to a point where I'm trying to sort of gauge my emotions. This sounds really like Zen and stuff, but it's not at all. I'm trying to gauge my emotions as I'm making a decision to buy. I haven't got to the point where I'm like that to on the sell side, but just when I go to buy something, I'm starting to form this theory of like how do I feel when I'm about to hit the bid? Do I feel excited or do I
Mm.
feel nervous? Because I've bought stuff that like as soon as it failed, I was like, yes, excited. And then I thought, well, why am I excited? Like this has already been going up, but there is that excitement of I'm finally on this train, that is going up, and it's hard to contain that excitement. You sort of feel it in your belly almost like yeah, I'm doing the right thing. But unless you're hitting the bid when you feel a little bit nervous, like this might come down a little bit more. Like it's not exciting when you're buying, energy fuels, but it shouldn't be. That's the right time to buy. And
It
so
yeah,
I'm
yeah.
starting to sort of pay attention to it because I remember like there were a few stocks that I bought even like 2 years ago when I started buying mining stocks. I bought one particular stock. I don't even remember which, and I had no idea why I bought it. I heard it somewhere. And I'm like, oh, this is a great idea. Go buy it. And then I had no reason to hold it, but I felt super excited when I bought it. I'm like, why am I holding this? I don't know. It's like hot potato all of a sudden, and then I just sold it at a loss.
That's Yeah, that's the worst feeling is to get trapped capital when you're in an idea, and then with when you look back with hindsight, you're like, man, that was a terrible like why did I do that? It was a big mistake. It should have been obvious, but maybe I was chasing price action or something.
But it feels super
But
exciting when you're hitting the bid, right? You're like, yeah,
yeah, I
I'm doing
really
the
like
right
your
thing.
point about energy fuels though, because when I actually like reflect back on some of the best performing stocks that I have like in my portfolio, one good example is like True Gold. That was
Mhm.
like at the time it was like 20 cents, or it was just like trading through the floor. And when I put in the bid, I mean, the first time around it was a very small tranche. I think it was like only $3,000, and it was nerve wracking, and when I look back, I'm like, why didn't I not add another zero to the end of the thing?
Oh man.
But it was not a feel good story. The stock was just just being so depressed, and it just kept going down every day. And you were hearing all these terrible news stories out of Burkina, and but that's the reason why the stock was so cheap, was because of the headlines, right? And it's kind of like energy feels right now. When you talk to anybody who doesn't even know anything about nuclear or uranium, and they say, "Why would you buy a uranium stock? It's only going to keep going down," right? I mean, that's the most common feedback you're going to get from everybody. And then you're like, "Well, because the spot price is about $22 a pound, and that's not sustainable long term."
Mhm.
They're still going to tell you it's a bad idea. And when you
But
buy
it's a
it,
great
when
idea.
I when I bought it, it sure felt like a bad idea, because as soon as my shares got filled, it closed the day like, and I was down 5%. I was like, oh, isn't this great?
Yeah, I was down
you know,
eight when I bought it. It had the same thing
yeah,
happen exactly.
it feels like catching falling knives, right? But that's just from the short term perspective. It really takes that type of conviction, I guess, is what you need in order to weather these storms, to know kind of in your mind, like, I'm betting on something that it's not guaranteed, but the risk versus reward appetite is so much more skewed towards the reward side, because, just fundamentally, logically speaking, a company like that should not be trading at these valuations, and the spot price of uranium should not be at $20 a pound,
Yeah.
when most of these producers are putting their minds on care and maintenance, and just shutting uh, down production, because it just doesn't make any sense to be selling at these levels. And it's just one of those things. And Rick Rule always points it out in his videos. It's, investors demand instant gratification, but you can't start like ramping up supply, and you can't drain excess capacity overnight. It could take
Mhm.
years, and in the case of uranium, it could take decades. But the tide will turn. You just have to be patient with these things and have that conviction again when you're buying, because usually when you are buying the right investments, you will feel the worst. That's kind of been my own personal experience. The stocks that have burned me the most were the ones where I was just chasing price action, and I was like, the train is leaving and I don't want to miss it, and then later on it's like, oh, it came crashing right back down, and now I can't get out of the stock.
Oh, there's so many good points there. So Fabi, first of all, I think that was a very good sell. Like, I actually think that's such a good example of, like, you bought it and you thought about it. You're like, oh, wait, why do I own this? And you know what? Most people, they would think that, but they would still hold on to it. And I've done that too. It's like, but I bought it. Like, how could I sell? I just wasted money on commissions and it went down a little bit. I'm going to waste more money. But you know what? Like, that's the price of admission. That's actually a very cheap way to have a really good learning experience. And unfortunately, sometimes you need a very costly learning experience. Like, I know that from personal experience, but like, when you have the real money on the line, the feelings matter so much. I'm totally on board with that. I'm actually, I wonder sometimes, like, I know that there are some very cold-blooded traders out there and they make tons of money and it's like very emotionless. But you know what? Like, I'm a somewhat emotional person. I think you can make money in this, but you need to be able to not necessarily control your emotions, but know how and why you feel about stuff all the time. I think that's an excellent piece of advice that I very, very rarely hear about. I mean, it's kind of like the psychology timing, but it takes it a different level, like being self-conscious. And when you think about the stocks you own, every month, even like every week, think about it. Like, how do I feel about it right now? How do I feel about it compared to when I bought it? And actually, do I want to buy more or do I not want to buy more? Like all of those types of things. To Jay's point, like, there are so many times I've thought so much about, like, oh, like, did I pay a little too much for this? I should have waited to a couple pennies more. And then a few months later, it like doubled or tripled. And I was like, why was I thinking about that? It doesn't matter. I should have just been buying. And, I actually do that more now. And maybe that is a little risky, but I feel that that's been ingrained in me. It's become more subconscious and hopefully to a better effect. But like, it's so important to have that context of, what really matters here, like fighting over pennies, or like, if the end goal is for this to be a double, a triple, or more, it just, none of that matters. Like, buy like crazy if you get the right amount of feelings. And as Jay pointed out, sometimes the best is when you feel the worst. Countless times, I know I felt bad about something. Like, even True Gold, I didn't buy that, and he brought up all the good points about Burkina Faso. But like, that was, one of the best risk rewards at that time, and I think that thing, quadrupled, and then it went up even more if you held on to the Endeavor gold mining shares. But like, there's just, it is such a weird thing. Like, as you start thinking about how you feel about your stocks, you will. I guarantee you'll start seeing patterns. And this isn't for everybody. I think some people have their own ways of going about it. But I'll tell you, from my personal experience, that can be really up on the list of something that anybody can do. Like, it doesn't require any technical knowledge, and it will help you no matter what asset class you're looking at. Whether it's real estate or buying and selling Beanie Babies, yeah, whatever.
He's really excited about the Beanie Babies. So tell us, since you're so excited about the Beanie Babies, what's like a takeaway that you can take from this book that you're reading about the Beanie Babies?
Yeah, so there's so many good anecdotes, and I'll try to leave most of the specific anecdotes. But I think one of the most fascinating things is how all of these forces came together so that the bubble could be created. And so, a few examples of that. I mean, what's neat is that the book starts about Ty Warner, and he's the billionaire. I mean, became a billionaire from the Beanie Babies, but started this company and was obsessed with plush toys. And there is some truth behind Beanie Babies being higher quality than what was out at the time. I mean, a lot of, like, you actually learn a lot about the differences in plush toys, which is fascinating in its own aspect. But that was a key factor, is that you got this high quality good for about $5. This was in the early to mid 90s, but it perfectly aligned with the rise of the internet. And so not only did you have the rise of the internet where you are able to distribute it, but like, even like, I think the bubble kind of started in 95. So like the first Beanie Babies were actually bought, not using the internet, but once you got on the internet, there were two factors there. There was eBay. I can't believe it. Like over 10% of eBay's revenues was just from trading Beanie Babies. I had no idea about
Wow.
that. So eBay, they actually hitched their wagon to eBay, and both of them grew together. And so that was perfect timing. But on top of that, they actually created a great corporate website at the time, and they didn't even know, how that was going to work out. But they were one of the first companies to take advantage of that, and they were interacting with people. And this was before anybody talked about social media, so they actually had a message board. And so the trading of it, like, took advantage of all those factors. You had the internet, you had a company message board, you had eBay, where like people could trade these things, and then the real kicker was McDonald's promotion. And so McDonald's promoted, you got the instant credibility there. And the thing is, by the time that happened, all the easy gains were made. I mean, you still could have made money, but that's when it went fully mainstream. And so that's where I think it would be really fun to tie this in with the asset bubble, theory like model that you have on one of your videos. And this book, it's so easy to pick out those points, because I think it's a little hard to grasp with, like, some of the other bubbles, but this one, it's all documented, and like you get a good indication of the rise and the fall, and you learn about, people who made, I don't know if anybody really made millions, but plenty of people made hundreds of thousands of dollars. And and a lot of them were just like moms in Chicago, like just like in the suburbs of Chicago. And then like some of the people who lost their money, they bought in after the McDonald's thing, and you hear about, their sad stories too. So much good stuff. Highest recommendation. Yeah.
That's so funny.